that's it. So Blake's coming on now, and I guess he's filling in for Dale. Dale's under the weather.
Yeah, he is not doing well. I talked to him yesterday over the phone. He has pneumonia, and so we're all, hoping he has a speedy recovery. He's going back to see the doctor today. So, unfortunately, I had to cancel all the interviews that he had scheduled this week, and he is just not. He's not feeling well. So we all hope him a speedy recovery.
So prayers to Dale's speedy recovery.
Yeah. So obviously during the ECB rate statement, nothing new. They kept rates unchanged. The market mover is obviously going to be, the press conference today, and we're going to be looking towards any clues that we might get from Mario Draghi as far as normalizing rates and a lot of people expect, and they always expect that these ECB meetings, Mario Draghi is going to take this opportunity to really talk down the euro dollar. So the euro dollar has been very hesitant about staging any type of rally. But I'll tell you what, Paul, we are up against some pretty key resistance in the euro. My chart looks exactly the same as yours. And really, I think that 116.50, which, if you think about it, 116.50, 116.60, this resistance right here that we're up against, the top of your green little box there, yeah, that little zone, it from a risk reward standpoint, it makes sense to be short. And I think that's what most traders are doing right now. They're just, shorting ahead of that number. But, there's one thing, in my opinion, that is keeping me extremely bullish the euro dollar. Do you know what that is right now?
What?
It's gold. And let me just take you guys.
I want to ask you a couple of questions before we take those. I want to ask you a couple of questions.
Yeah, go ahead.
I was actually telling the folks I wanted to ask you questions on this. One of the things I did mention, since you mentioned gold, we'll just go to gold real quickly. Is I noticed over the last couple of weeks, gold is mildly, I put it this way, mildly positively diverged from the cash dollar index, in the sense that every time the dollar index would move to these highs, gold would pull down, but I said it pulled down like a kid as taking a crying, screaming kid into the doctor's office. It would go more, but it held up very well. And yesterday we had our daily resistance at 1207, and it closed above us, so that's support. And I do like gold here. I'm going to be buying. I don't know if it'll make it down there, but I'm buying any dips down here to this 1204 with a target of 1245. And the only thing that invalidates it to me is a 2-hour close below 97. But I want to go and ask you about this. I told the folks I was going to ask you. You're real good with these chart patterns. This is what I've seen here in the cash dollar index. And you posted the news in the chat room. Was when Steve Mnuchin reached out to China after the administration's had all these acrimonious comments. And one of the reasons that the dollar rallied on Friday, although we had a good NFP, the dollar index wasn't doing all that much. And then also it rallied when Trump says, you know what, I'll throw another $276 billion worth of tariffs on China. And then we got the dollar moving higher. Well, now the administration has reached out to China as, trying to see if they can restart things. To me, that's a perceived sign of weakness. Not that I want them to have trade wars, but I'm saying that's what the dollar's been hanging its hat on. And look how we broke this. What do you think about this pattern here? Do you think that means anything? Because to me, here's what I did. What I came up with, could be wrong as all get out. I just moved this down here, and to me that from this area right here, and to me that gives me 92.80. And so my technical look is just from how I'm going to trade it. Any rallies back to this trend line, I'm selling with a 2-hour stop of a 2-hour close above 95.32. That's been a huge area, and I'm targeting 92.80 with a pause at 93.72. So I'm interested in what you think about the dollar index, and what do you think? Does this mean anything? This little formation that we have on this cash dollar index right now?
Well, that's a good question, and what I'm going to do is I'll take over because I'll just show you what I'm not My dollar index is not quite like yours. So yours is, this is a 4-hour chart of the dollar, and yours is drawn like this. And I'm just going to draw it really quick. Yours is more like this.
Exactly.
Something like this.
Yeah.
It's a little bit more of a, how should I say? I'm focused on a little bit different trend line, which is actually the lower red trend line you can see here.
Mm-hmm.
And so, I look at the dollar index in a couple of different ways. First of all, this move right here to this high that we posted back in the mid-August, that was actually a 618 retracement. So if you take a fib and you go from the high to the low here, actually it was just shy of a 618. So just shy of a 618, and God, there's another 618 around here. I have to go back to figure out exactly where it is, but because the charts get a little too messy if you don't delete things along the way. But this upward sloping trend line, I think, is a big issue currently. And then you can also take a look at it like it's also a longer term, potentially head and shoulders pattern. If we come down like this and we develop some sort of head and shoulder longer term. Now I do think that that any break through this 94.80 level in the dollar index, there's limited downside. So downside might be limited to 93.50, 93.70, somewhere in that neighborhood. So I think right now, if like for today specifically, what I'm looking for is if the dollar index breaks the overnight lows. So if we break the overnight lows, then the immediate target is 94.50 here, and then all the way down to 93.70 is possible. And that's what I'm looking for as far as the dollar index. And the only thing that's going to really deter me from being bearish the dollar at this point is if we get a break back above 95.70, which would be right here, the 50% retracement that's been holding us. I do think that the dollar is vulnerable right now. So basically, going back to the euro dollar, and you were you had this like zone, and I'll just try to replicate it here. Yeah, your zone looks something like this. Okay. Which I would generally speaking agree with. So what I'd like to see is a move above 116.50, 116.60, and then we break above that. We should challenge the 117.80 level, which is the 50% retracement. You can see this. Here,
it's a 38% of the entire move too. 17.80.
Oh, 38% retracement. I said 50, but yeah, it's a 38% retracement. So I think this is a very viable target near term if the euro breaks through 116.60 today. So and you have to also understand the market is long dollars, okay, short Aussie dollars, short cable, and short euro to an extent. So if we get a move, am I looking for the euro to head back to 122? No, I'm not. Is the potential to rally to 117.80, the 38% retracement, which also, by the way, if you can't see it all here, let me grab the pen again. I'm gonna grab a different pen color. There we go. And if you can't see it, there's a ton of resistance up here around this 117.60 to 80 level. You can see all that right through there. I think that's a viable target. One of the issues that I said, and I've been saying for the last few weeks, which I think is going to emerge in the coming weeks, is Italy. I do think Italy is a big issue, but you can see also how the Italian bond market has really recovered. From this is the daily chart. So this is the scary zone in the bond market, but you can see bonds really spiked higher. As people are buying back Italian debt, which that means we're kind of off the radar for now. But if the Italian bond market comes back under pressure again, that's when we have to start being a little worried. I do think we're gonna be back to revisit this area, sometime, this fall. I don't think it's today necessarily. So I think that the Italian bonds can continue to rally and help push the euro dollar, help it recover, a little further towards, 117, 117 and a half, 117.80, maybe get back up to that 38% retracement. But, now that we're kind of pushed out of this triangle, only thing I'm focused on today is right here. Now, I'd mentioned the reason why that I am bullish the euro near term, or maybe I should put it differently. I'm bearish the dollar at the moment is gold. And you just gave the exact levels that I'm thinking is that gold, here's the gold market, gold can press back to 1240, which 1240 was a big breakdown point. If you guys don't remember, okay, 1240, if you look here, okay, 1240 was a big breakdown point. This is a daily chart. This is a flag pattern. It looks like that, right? You know what? That's not coming out correctly. So let me just do it this way. So that's a flag pattern in gold. We're breaking out already. All right. So gold can come back and test 1240. So what do you think happens to the euro dollar when gold is rallying the way it is? That's gonna take the euro dollar higher as well. So for gold, what I'm looking for is this trend high, and if this breaks, which is 12, let's say roughly 1214 on spot price. If you're looking at like December gold prices, it's probably a little different. It's probably like $5 higher, I would think. But if you see gold take out 1213, 1214 on the spot price, that means that euro dollar is probably taking out 116.60. That means the euro dollar is then now heading towards 117.50, 117.80. Gold's on its way to 1240. Now, the one last piece of the puzzle, because I like to explain to people, Polly, that every morning, it's like I get up at 3 o'clock in the morning, I sit down, and it's like a puzzle. Like it's like a 1,000-piece jigsaw puzzle, and I'm taking all these little pieces and I'm putting them together, right? And the more I can put together to make the picture look right, the better off I'm going to be that day. So like for me, the last piece of the puzzle that is really put together for me to be real confident about being long the euro dollar today and moving forward for the next couple of days, it's the euro above 1660, gold above 12, 13, 12, 14, and then last but not least, silver. If silver breaks above 1430, which would be the channel resistance right here, and you can see I actually have an alarm set up, and above the previous support right here, which is it was a big 161% extension, then I know silver is breaking higher too, which is again another feather in the cap to be long or short dollars, long euro. So again, silver, gold, and the euro dollar. And also, I guess we can also mention that the cable, let's throw a few other pieces of the puzzle out at you. The cable is firm right now. You can see the cable's just waiting on the euro. Cable gets above 130.80, it's gone, right? I mean, we're just knocking our head right up against that resistance. So once we start breaking above 130.80, the pound is going to recover. A lot of positive news flows about Brexit recently. Do I think that the UK is out of the woods yet? No, but do I think it's capable of a 200-300 pip rally in the pound as it squeezes all the shorts in the cable? Yeah, I think that's real doable. And like I said, do I think that there's a deal on the table with Brexit? Not necessarily, but there's still a lot of hurdles. But still, the market is extremely short and could get squeezed, especially if we see broad-based U.S. dollar weakness. Then you have the Aussie dollar. The Aussie dollar. We have great jobs data last night, right? So here's the Aussie. We have here's an hourly bull flag. Okay, still trying to play out. Hourly bull flag. We get above 72 cents in the Aussie dollar, which is the previous breakdown point. Aussie gets above 72 cents. We're going to 72.40. So again, you know, we've got all these puzzle pieces all lining up. So now the only thing that I'm waiting for today is you know, we have in 13 minutes, we have the ECB meeting, excuse me, the ECB press conference with Mario Draghi. If he is anything but dovish, so let's say he's just neutral, you know, and he, you know, meets our minimum expectations as far as neutral, maybe even slightly hawkish. The euro dollar has the potential to squeeze. Gold can squeeze, silver can squeeze, the pound can squeeze, the Aussie can squeeze. You know, and by the way, the Aussie is, everybody's extremely bearish the Aussie, and with rightfully so. I mean, we've gone from 81 cents to 71 cents in 2018. That is a 12-13% drop in a currency in just you know, in just 6 months. Yeah, since February. So, you know, we've got the potential to really recover. Does that mean that the dollar's, you know, done, you know, stick a fork in it? No, I mean, but the Aussie could very easily recover back to 73 cents and still be confined to a downtrend. You know, so I mean, you got this downtrend that comes in at 73.70. I mean, we could very easily be trading back up at 73.50, 73.70. Again, euro dollar at 117.80, pound dollar at 132, gold at 1240, silver at, let's say, 1450, 1460, Aussie dollar at 73.60. Does that change the longer term trajectory of the US dollar and precious metals? No, but you know, a recovery is possible. So I'm just waiting for all these puzzle pieces to fall in line. Hopefully today, following this the ECB press conference that we have in 10 minutes. So so anyway, those are just my quick thoughts, Paul. Steve and Stelios are coming on here momentarily, and I'm gonna hand it over to them. But any other last comments to our listeners? And by the way, we have a lot of listeners in today. This is investing.com day. So if you are listening in through the investing.com website, I want to welcome you guys and gals. We have a very big group today. So welcome everybody. We do this every single day, every morning. We start at, now we start at 7 a.m. Eastern. We used to start at 8 a.m. Eastern, but with Paul Franco, we have it at 7 a.m. Eastern. So you can always use this link and log in. We're glad to have you here. So any other comments, Paul?
No, that's it. Just on the dollar index is that it's been hanging on, and now it just when you posted that comment about Steve Mnuchin reaching out to China, that took the wind out of the sails for the dollar, and it hasn't recovered since then. Not that it fell apart, but I'm looking to sell rallies in the dollar index unless we get a 2-hour close above 95.32. And for whatever reason, I was mentioning, these ECB days always seem to turn out positive for the euro, no matter how negative it is. The euro always seems to find a way to rally on ECB days. So I guess I'm just going to be looking at the percentages, but I think a pullback, if we can get a pullback, anything like 1573, that's a great area to enter with the euro, and only a daily close below 1541 would negate that.
All right, well, there you go, guys. That's those are some thoughts from Paul Franco, SPZ trader. Thank you, Paulie, for being here. Appreciate your efforts, and I'll take it over from here.
Okay.
All right, thanks, man. All right, guys, and again, Steve and Stelios, my two Greek trading gods, are going to be joining me here momentarily, and I've covered most of the things that I wanted to cover today. There's another chart that I think is worth noting here, is the US dollar Swedish krona, and I'm so irritated the way I traded it yesterday. And I'm not even exaggerating. I was short at 905, and just so you guys can see the formation I've been looking at forever. This is a big butterfly pattern, and I've been waiting for this crack below 903 forever. I was short at 905 yesterday, 906 actually, it was like 905 and change. I closed it yesterday. I'm not even exaggerating. I closed it at 904 something. Took a little, just a little smidge off the table. And then this happened probably about 20 minutes after I got out of the position. And I was so irritated. It was after the, you know, potential, is the Chinese news that the U.S. and China might restart trade talks. Of course, that literally happened a few minutes after the fact. So I'm so irritated about that. But the fact of the matter is, when you're seeing the Swedish krona, you're seeing the Norwegian krona. Here's the Norwegian krona strengthen. And by the way, this is a, you know, ABCD pattern, just so you guys can see it. Okay. That's my response.
Very interesting zone.
What's that?
Blake, good morning.
Good morning.
Yeah, I had my eyes set on 820. You know, so we're getting there. So I'm really interested to see what's going to happen from there.
Yeah, and you know, if you really want to, you know, get a little you know, fancy with me, this is this 820 level is going to be basically a Gartley pattern completion. So I mean, you know, it all ties in together. And but you know, I always love harmonics, because if you break this 820, then you turn into a butterfly, which is you know, takes us way down here somewhere in this neighborhood, you know, like this. You know, that could be a realistic expectation too, if the yeah, so we should get a reaction somewhere around here for you know, a Gartley bounce. But again, if you have the euro dollar breaking higher, the cable breaking higher, the Aussie breaking higher, you know, you're going to end up seeing much bigger move here. So what's going on, Steve? What's happening over there?
Nothing much. You know, new season has started, and you know, it's enough to keep me busy all day long.
New season of Breaking Bad? Is Breaking Bad back on TV?
No, I mean, you know, yeah, you know.
New so trading season, right? Yes.
New trading season, yes, exactly. New trading season, new projects. You know, things that were left over from the summer. I think everybody goes through the same, right?
Right, exactly. So, and by the way, guys, if you're a ForexAnalytix subscriber, this is our. I want to show you just a couple of things that are really key. So this is our platform. If you've never seen our platform, which, you know, we have everything from live streaming news to different updates to the calendars to integrated Twitter. We have, you know, active tickers, active patterns in play, you know, trades that we have, you know, set up, closed patterns in play. You know, all your analysis is right here at your fingertips for anything that you want to, any one of these 30 tickers that we cover. But we have an active trader chat room, which you can see right now. We have about 93 traders online. And you guys are on Jumbotron. I wanted to show this is brand new. And by the way, Steve and the development team just wrapped this up last Friday. We launched it last Friday, and these guys are all being goofy now and posting all sorts of funny stuff, so you guys can all see it, all the people on the webinar. This is a private community, and we have so many great traders, and you can see 137 new messages since just a few minutes ago, and everybody's talking about, you know, trades and charts, and we have, Stelios posted the DSI. So one of the cool things, and I wanted to show you guys this for those of you that use it, if you come over here and you go to file list, you can see all the different charts that people have you know, put up, and you know, what the comments were, you know, because, you know, you post a chart and sometimes there's comments, and this is a great way for, like, at night during the Asian trade, I, you know, post the daily sentiment index. I try to, if there's something interesting to be seen there, and I posted it again this morning, and people are like, oh, it's real easy to find it. And I'm like, you know, I don't think everybody knows how to find it. So it's just, all you have to do is go up here to where it says file list, and it'll take you to all the different charts and, you know, and then goofy stuff that people have been posting, like a mirror right there. Anyway, a lot of great features here. I'm not going to waste our time with that. I just wanted to mention that really quick before I flip it over to you guys. It should be an exciting ECB meeting, so I'm going to turn it over to you guys. We also have, not to mention, we have, aside from the ECB meeting, we have our weekly unemployment claims. We got Canadian National Home Price Index as well, and CPI out of the US. So a lot of data coming out in just a few minutes. So how are you guys doing today?
Very well, very well. All good. Actually, we have 2 minutes before the data, so I might as well cover a couple of things. One is it's a currency that we don't actually cover at ForexAnalytix, but it's always interesting. We had Turkey hiking rates today, and they actually hiked
Yes.
more than expected. I think the expectation was about 3% hike, and they hiked all the way to 24%, which was, I think, a 6.5% hike or something like that in the region. And
Finally.
yes, and you know, that was actually the Turkish lira.
Erdogan was very hesitant. He didn't want to raise rates.
Yeah, he made comments just an hour before saying, "Oh, we need to lower these rates," and the market got a bit spooked. Yeah, the market got spooked. The dollar Turkey went up to 630, 635. Then right after they hiked, it went down to nearly 6. And now it's coming back to 620. So it shows that, you know, obviously hiking rates will make an instant difference in how attractive a currency looks like. But people are looking a bit further ahead. And further ahead, you know, you can hike rates as much as you want, but really the problems will remain. So it did have an effect on the lira, but not a very long-lasting one, I must say.
As usually, Stelio, you know, first of all, those comments from Erdogan are kind of funny because we're talking about the same guy that during the previous crisis that we had in the Turkish lira, if you remember, he had decided to head the meeting of the central bank. So, you know, saying, since everybody knows that he actually guides what the central bank is going to do, and saying like, a few hours before that, you know, that we should actually lower rates, and then seeing, you know, such a big rate rise, there's absolutely zero chance he didn't know what he hadn't approved it. The point is that he ends up having to do what he had to do since the beginning, but if they did it earlier, they would avoid all the rest of the pain, right? I mean, they would have probably prevented the Turkish lira from depreciating that much during the past couple of months.
Yeah, absolutely. I mean, using your reserves to try and to, you know, but to protect your currency, you need big pockets to actually do that properly. And, you know, Turkey, you know, they sold some gold, didn't they? And they sold some dollars, or what was it? But anyway, okay, so we have 5 seconds to the numbers.
Let's see CPI data. Yeah, that's quite important. Although I think that the market will hardly react unless it's an extreme number, and until we see.
Let's see. So it's a miss. It's a miss by
0.1. It's a miss.
Yeah.
0.1 month on month versus 0.2 expected, 2.2 core CPI versus 2.4 expected. Other than that, initial jobless claims, more or less, a little bit better than expected, but more or less like, you know, as expected. I mean, the difference is not that much to talk about. Retail sales, no, that's okay. So, yeah, a little bit softer inflation data. Of course, as everybody knows, you know, those can be revised again. So, you know, I wouldn't pay so much attention to that. I mean, it's a small miss. In general, inflation is you know, quite at the highs, above the Fed's target. That's the only sure thing. So I believe that the market is now going to wait to see what Mario Draghi is going to say.
Yes.
As if you remember, Stelios, as we were discussing together, and I remember I had this discussion with Blake as well. You know, with the market pricing that the ECB is not going to actually do anything for another year, more or less, I think that any kind of a surprise, if we get any kind of a surprise, it's going to be a hawky surprise. So, in my opinion, the dangers of a surprise are to see, you know, a higher Euro USD. So I would be, you know, quite careful being short. There was the potential, there still is the potential of a head and shoulders formation here. But to be honest, and I've explained that since the beginning, most likely than not, this is some kind of a triangle. So I would expect that, from a technical perspective, at least, if we end up seeing another push higher towards perhaps this support resistance area at 118.40, technically it looks much better to me than the alternative. Of course, nobody can assume in advance what Draghi is going to say, and that's why we have you. So please, if you can start giving us, the important headlines of his speech. He will initially, as always, read, scripted text, and then he's going to go ahead and answer some questions. Let me also show, because it's extremely correlated. I was mentioning yesterday very specifically that yesterday during the webinar we were, near the 97.50 once again. I said that I expect that the most probable scenario is another rejection from 97.50 in the USD Swiss, and unless we actually break above it, I would be extremely skeptical in trying to buy it. That also fits, knowing that there is an inverse correlation. That also fits what I just said. Ideally, from a technical perspective, I would want to see Euro USD move higher following Draghi's statements, at least for a short period of time, to complete one more leg to the upside, to get what I would expect would be the minimum type of a correction, like an ABC type of a correction. Do we have anything on the wires so far?
So far, Draghi is actually, as always, talking both sides of the coin. He said that the underlying strength of the economy continues to support confidence, which is, is not dovish for sure. But then he says significant stimulus is still needed to support inflation. So this thing about, so this thing of them waiting for another year to hike, he's actually just confirming this now. So I think it's all going to be about the Q&A, as always. The presser in the end. I don't see anything having changed since the last meeting that will make him say something
I see
different.
more of a dovish message here. Uncertainties relating to rising protectionism, financial market volatility gain more prominence, significant monetary policy stimulus still needed. So yes, in essence, he is trying to push the envelope as much as possible, given the fact that there is an undoubted improvement in the Eurozone data. But, despite seeing that, he wants to keep the market's expectations about any hawkish reversal from the side of the ECB for something that is deep in the future. Personally, I'm quite doubtful that if they actually uphold to what they're saying, that in a year from now, the global conditions are going to be such that might allow, in general, any hawkishness from any central bank. But we're going to see. We also need to see if we're going to have any change of stance, when Draghi is off the chair, right? So, that's also a possibility. I don't know, any insight about that, Stelio?
When Draghi is what? Off the chair? Yeah, well, the question is who's going to replace him, so...
I know. Who is the favorite currently? Who is...
the German,
by the way, this is a view...
The German candidate, right? So who...
Personally, let me make, let me just make my, my personal assumption, from various different elements. I'm assuming that no matter if they say that, he's the most likely candidate, I don't find it easy that the Eurozone is going to give Germans the position. I think that, everybody know that the Germans are more hawkish, and I don't see that much likely. I know that it's still good. I don't know. I still believe that we might see somebody else. We'll find out. Okay, Euro yen. Euro yen, I think, also has quite a corrective structure. This is what we were pointing on here at the 6th of September. I said that I would like to see another move lower, and perhaps then another push to the upside that might get us up towards this support resistance area at 130, 170, might even make it a little bit higher at the 61.8, 132.50, 60 roughly. So far the price action I'm seeing here looks good. I mean, this looks like a bull flag, you know, that can break to the upside. So let me draw it something like this. Oh, I'm sorry, but this mouse is not the best one. So something like this. So I still think that it looks quite good for a stronger recovery higher. So let's have a look at the rest of the euro crosses, and Stelio, interrupt me at any given point if Draghi says something that might move the market. Now, Euro Aussie, we had quite a nice reversal confirmed yesterday. Why did it get confirmed yesterday? Because with yesterday's candle, we have a confirmed evening star formation. So, you know, the combination of those three candles, not counting today's candle, right? Previous three candles is an evening star formation. That's quite a bearish signal. And we're currently actually testing horizontal support area. It was resistance. It was, you know, the previous high that we had. We retested that area once again, you know, a couple of weeks later. We're now testing it as support. Personally, I find it kind of doubtful that the pair, you know, might get restricted to just a couple of days of pulling back. But you never know, because the move higher has been strong. So, you know, 160, 150 is a strong area of support resistance. So obviously I won't be selling it right on this support, but if we see the support break, I think there should be a decent extension lower, even if that ends up being simply a corrective move. Euro Kiwi, you know, some signs of a reversal yesterday, but holding much better than the Euro Aussie. On the other hand, though, the move higher for the Euro Kiwi was not initially that strong. You know, the key level for Euro Kiwi that also establishes the current uptrend is definitely now the 174.40. I think that as long as we remain above that area, you know, anything, any move to the downside should initially be viewed as corrective in nature. Now let's have a look at the Euro Pound as well.
Steve, before you do that, just one little comment.
Absolutely.
Draghi is talking about inflation. He's saying that price pressures are rising. And he also said that the uncertainty around the inflation outlook is receding, which means that, you know, he's probably more confident that they're going to reach the target and exceed it with the current monetary policy. That gave the euro just a slight tick high, like 10.
A little bit of a move. Yeah. Okay. Let me see. Yeah. Absolutely. We are now approaching 116.70. I'm going to show it in a few seconds. Sure. Let me first go through Euro Pound. There are two things that I need to comment about Euro Pound. One, Euro Pound is finding support where you would expect it to do so. Why? Simply put, because we were expecting this descending channel for many months. We broke above it, we came down, we're retesting it. So, you know, finding support here is a bullish indication. But on the other hand, just looking at the shorter term, what we've seen so far from the market is two long spinning tops yesterday and the day before yesterday, and so far a pin bar today. These are not daily candles that actually inspire you know, traders that some bullish strength is coming along. So we did find support at where you would want to find support, where you would want as a bull to see the pair getting supported. But we've already spent like 2.5 days more or less consolidating the recent losses. And, you know, for every hour we spend here without being able to show some actual strength to the upside, the higher the likelihood that we will actually resume lower. So, you know, I can't dismiss what I'm seeing here in the short term. So it looks like we might have, you know, more downside pressure, at least for one more push lower. Now let's revisit Euro USD. Okay, Euro USD, as I said, the head and shoulders formation has been since the very beginning my B scenario in a sense, because my first scenario is that this recent consolidation is a pennant or something like that, or a flag, or depends on how you decide to draw it. So I think that, you know, it's quite important to see this descending trend line resistance. If we actually break above it, we should see some continuation. And as I said, I think that the next upside target is roughly at 118.40. Personally, I consider it very likely that we're going to make it. Now, Blake mentioned it before. Is quite an important one. In my opinion, if we actually finally close above this 130 resistance area, because it's an area, it's not just the 130 level, it extends a little bit. I think that it's going to be a good indication that there's, one more leg higher coming, in which case I would want to see this confluence of resistances at 133, it's the 38.2 from the highs to the lows, to the recent lows. It's also that 133 area is a horizontal support resistance area. So I would want to see the cable tag that 133 zone before perhaps displaying more weakness. Now let's have a look at the pound yen, and Stelio still applies. Any comment you want to make, anything that Draghi says that's of interest, please feel free to interrupt. Pound yen, we drew this a long time ago, as you see, it was at some point 3rd of August probably. I said that I expect this move to unfold in a corrective manner. What that would mean is perhaps a move towards 144.50. We exceeded that actually. We made it to 145.70, which was the 61.8 of the last leg lower. Then a move to the downside. We did get that, and perhaps one more leg higher. I would want to see that leg higher. Perhaps I was thinking back then, finding that confluence of support resistance areas. It's the 78.6 of the last leg lower. It would have been the extension of this trend line support, finding it as resistance. It's also a horizontal support resistance area. So far, the pound yen has been playing ball perfectly, and as I just said, an extension even towards 147.50 wouldn't actually change my bearish bias. Okay, so I'm not troubled at all by the fact that it's moving higher. I actually think that this can potentially prove to be a nice opportunity, for a trade a few days down the road, for a short trade a few days down the road. So this is another thing I wanted to show, because I don't think we had a look at the yen pairs yesterday. Euro USD, by the way, highs of the day. Let's switch back again to the USD Swiss, because I'm guessing that the USD Swiss is approaching the 96.50 area once again. No surprise here. I would expect that there's a high likelihood that we're going to break this consolidation to the downside, perhaps for one more leg lower, before seeing some bigger recovery. In which case, I think the 61.8 of the last move higher, which comes at 95.25 cents, is the natural next target. I'm not sure we're going to make it all the way to that, I have to admit. 95.60 is also a level of interest, so we might not even make it to the 61.8, before seeing some big recovery. But it remains to be seen. One thing is for sure, as I said yesterday, as long as we trade below 97.50, there is absolutely no reason why you want to be bullish the pair. I mean, in my opinion, it's extremely risky. Now, I want to say a couple of things, and Stelio, if we have some movement in FX, do interrupt me.
Yeah, sure. We're seeing dollar weakness. It's not just the euro dollar going up, it's just broad dollar weakness, and precious metals are going higher as well. So there's nothing particular from Draghi coming out at the moment. But yeah, the dollars.
Sometimes people do not realize, but sometimes, and this is something that you always need to have in mind, and that's why I'm going to show the DXY chart, but this is something that's very important for me to send out as a message. There are sometimes that people are looking for indications of, okay, what the hell did Draghi just say? And we're seeing this dollar weakness. Sometimes the answer is that the market already had a direction to the downside having to do with the dollar, because we had already seen a move lower, you can see it here, and some kind of a consolidation or a little correction higher, following which the market probably just stalled because people didn't want to get wrong-footed ahead of the ECB. So sometimes you might not get the message that you would expect that you would need to get, for example, to see more euro strength or more dollar weakness. But the key element is what you said, Stelio. It's not just that the euro USD is going higher, it's that the dollar is being sold in general. In my opinion, what that shows is that the market wanted to sell dollars, just didn't want to do it ahead of the ECB. So now seeing that, you know, Draghi in essence doesn't steer the pot at all, so he's trying, and perhaps he's going to achieve making this a non-event, and the market being relieved from, you know, all other event risk, can now go ahead and do what it wanted to do prior to, you know, this week's events. So that's my interpretation of what's happening here. I don't find it, you know, weird or, you know, unexpected. I do see that this ascending trend line support is breaking to the downside. This is exactly what we drew some time ago, this red line here. I was expecting that if we did make it below this 95 area once again, we would see another leg to the downside. So I have to admit that I wouldn't be surprised at all to see, you know, a follow-up in dollar weakness. That's why I was already positioned. People in the chat room know that very well. I was already positioned long gold. Gold is actually breaking higher. We had quite a nice move yesterday. If today ends up confirming, I do think that we're going to make it to the 38.2 of this bearish move lower, which comes at 1238. So, you know, I like this position. I'm going to stick with it for now. And unless we see some kind of a big reversal by the end of the day, which is completely going to change, you know, the outlook, you know, I'm gonna still like it higher, at least for a short period of time. And when I say short period of time, since I'm not a scalper, I mean at least a few days, right? I don't mean you know, a few minutes or a few hours. Speaking of which, it's a good idea to have a look at the Aussie USD. If you remember, I made it very clear that once we reached my target, both for Aussie and Kiwi, for Aussie, it was the 71 cents. Why? Because that was the 161.8% extension of this last bullish leg that we had before actually breaking down from the bigger formation. There definitely wasn't anymore any reward to risk ratio to be looking to be short. I mean, you know, so far this is getting confirmed. We had a very strong day yesterday. I think that should have acted as a warning. We're seeing some follow through today. Needless to say, if we end up finally breaking above this descending channel, we might see the market actually, just from short covering, etc., we might see the market rally even more than expected. That doesn't change the bearish bias, but don't forget that an extended move can also bring an extended or a decently prolonged correction. Same thing exactly happened with the Kiwi. Since a long time ago, I was pointing out to this triple confluence of supports at 65 cents. So actually we made it there. We tested that general area twice, and you know, we're reversing from there as well. Obviously 67.30 remains quite an important resistance area. It was quite an important support area. So it then, after we broke below it, it acted once as the resistance, and you know, we have to clear above it. But you know, the dangers of seeing a snapback rally here are quite big as well. Speaking of which, let's have a look at the Canadian dollar. So let's have a look at it. Yesterday, I warned about it. I said that, you know, it still looks nice, but you know, if we get another couple of days of strong sell-off, then you know, things obviously change, because it's one thing liking a level, but as I've said many times, it also has to do with the structure agreeing with what you expected once you touch that level. So, you know, did I like it at 131? Absolutely. I didn't consider buying it ahead of the event risk, and also for the reason because that last day that brought us to 131, you know, entailed quite a strong sell-off. This is something that, you know, made me a little bit more skeptical about it. Yesterday, it was quite a tough day as well. We're currently at 130. You know, we might be getting ourselves a more complicated corrective formation here. This might end up being like a larger triangle, or it might end up being like a, you know, any Elliott wave complex correction. So, you know, I remain a little bit skeptical, so I remain sidelined. I still like it in the medium term higher, but I wouldn't be buying it after, you know, this kind of a behavior right now. I would definitely now require more evidence that, you know, it's actually turning higher before I even considered committing to that. Now, having to do with the USD yen, two comments here. One, for some reason, it looks to me like it wants to break to the upside. This 111.50 area has acted as a resistance so many times so far. You know, my preferred, obviously, approach to this, and I've said it several weeks ago, is stay as far away from it as possible, simply because you know, it's too choppy and there's no reason. I mean, we have so many tickers, we can find opportunities to trade, so why force yourself to trade something that you know, looks so bad, so hard to read from a technical perspective? Let's have another look at the Euro USD. Euro USD more or less at the highs. Stelio, anything else so far that Draghi has said that's even remotely interesting?
I'm afraid not, Steve. So
okay, why don't you give me then a few questions that perhaps we haven't covered so far,
yes.
Before we call it a day, and then, you know,
Okay.
we will be at the chat room as always,
Okay.
you know, sharing.
I think, first of all, it's probably a good point to mention our sponsors here. So Forest Park FX, who are the sponsors of this webinar and who make it happen. We have a page on our site, our reimbursement page, and, you know, any help you guys need with brokers that can help you find the right solution for you. And you know, it can be the same broker, same spread, same service, but you can get your ForexAnalytix subscription reimbursed partially or fully. Or if you're US
absolutely, and you can even just use them by contacting them via Skype or via email to get some guidance completely pro bono. I mean, you know, there is absolutely no reason why you just can't get an opinion. You know, there's no commitment whatsoever. So thank you for mentioning and reminding us about that, Stelio. Now, give me a few questions.
Yeah, we have 5 minutes, so we might cover 2 or 3 things. Now, there's one which I'm being asked by actually a good friend of mine, Yanis, who would like to have a look at something maybe you haven't seen before, but the Shanghai Equity Index. Have you covered that recently? Do you know the ticker for that? Actually? I don't know the ticker.
I'm actually having to do with China. I'm only monitoring the FXI.
Okay, maybe that's a good proxy.
Which is the China large cap. And what I wanted to show here is that we had an expanding formation, as you see, an expanding triangle perhaps. And, you know, we found support here. I also had like an ABC target down at 39.53. We didn't make it there, but we came decently close. We made it to 39.85. So I wouldn't be selling down here if that's the question. It still looks bearish, it still looks heavy, but honestly, I think that the easy place to have sold that, and we were covering it back then, was at the breakout of that triangle, because this was so textbook. One leg down, consolidation, at least one more leg down should follow. That was the easy trade here. The breakdown from this roughly, let's call it 45 zone. Now down here, I would be quite a lot more skeptical. So that's my comment about that. Thank you for reminding me, by the way, because I wanted to show 2 more things. One, I've kept going over again and again about, you know, talking about the importance of 11,800 for the DAX. Why? Because this is the neckline of a big head and shoulders formation. So far, we rebounded, you know, from there, not exactly from there, but just above that. So, and we're currently retesting like the 12,100 zone, which was a zone of support in the past, resistance even further back. It might act as a resistance again. So definitely the DAX is not out of the woods yet. But, you know, it is worthwhile noting that so far that neckline has held. So that's comment number 1. Comment number 2 is that the FTSE looks you know, the move lower in the FTSE looks quite more bearish than I initially expected. So perhaps this is a more complex move. We did find support at the 61.8. So far, the price action does not indicate like a big bullish reversal or anything, but I want to see more price action. You know, from a first approach, it looks like the move lower is not done yet, though. And one more thing, that the Nikkei is showing strength again, but as I have been saying for a long time, 23,000 is the key level for the bears to hold. The bulls need to reclaim the area above 23,000, and if they actually do manage to do that, I do believe that we're going to see follow through in the Nikkei. That would also probably bode well with my thesis that USD yen looks like it might produce some more strength. Now, I don't know if that's going to then lead to a reversal, but combining the technical picture I see in the Nikkei with what I see in the USD yen, I wouldn't be surprised, if we did finally manage to make a move higher. Stelio, one more question, perhaps.
Yes.
So
actually,
choose wisely.
I know you covered the indices, but I missed a minute of it. We were asked the S&P and the DAX. Did you cover those too? Because I know you covered the Nikkei.
No, the S&P I didn't.
Okay.
What I have to say with the S&P is that we are still holding within this ascending channel, and more importantly, there was an internal trend line support. You can see it here. It's depicted like this red intermittent line. We did hold this. I'm not really enthusiastic about the recovery we had from that. My intuition and my experience tells me that perhaps there is more downside left as part of a corrective move before actually seeing more strength. But in general, in the S&P, there is absolutely no technical damage that has been done. So I really have no reason to advocate for somebody to be bearish. So thank you all very much. We had a huge attendance today. And as always, we're going to be updating you with notifications via ForexAnalytix. We're going to be in the chat room to share ideas, trades, etc. And as always, we'll be here tomorrow again. Let me just say that Dale has pneumonia, unfortunately, so it might take him a few more days to be with us. We wish him, a very fast recovery. I know that you all miss him, and we have people asking. That's why I wanted to let you know. He should be fine, but it's going to take a few more days. So thank you all for being here, and see you back tomorrow.
Thank you, Steve.
Thank you, Stella.
Thanks.